welcome back to those who are over the Zoom. I can't state enough how excited I am for this next session, because I know we spent this morning talking through different ways your practices can sell, right? You heard from Phil, you heard from some of our partners, you even heard from some of our practices. But when we were building the agenda, what was really important for us was to really understand other ambitions that we understand your practice may have. And we know that part of that is potentially even selling your practice one day. And so that's what the PE Roundtable is all about, is us bringing in those experts to give the insights and knowledge in terms of what you need to know about not only your future growth, but everything about potentially future selling your practice or even consolidating it into more. And so without further ado, I'd love to introduce our panel, started by Drew from AMP.
Hey, hopefully everyone can hear me all right.
We hear Drew.
I'm Drew Fine. I'm the Chief Commercial Officer for Advanced Metastatic Partners. We are just had our 6-month anniversary yesterday, we like to say, but we are one of the groups that is, I hate to say acquiring, but acquiring and partnering with practices, since most of the practices that join do become shareholders in the bigger company. So we've grown pretty quickly from about 7 practices in October to 28 currently. We expect to double again in the next 3 or 4 months. And I think we're starting to see a lot of benefits of pulling great practices together. So really looking forward to answering questions, helping people learn a little bit more about AMP. What I usually tell people is, if you know the Marriott Hotel program, think of AMP as building the autograph collection of aesthetics. So everyone kind of maintains their own special, unique brand and what makes you amazing with your practice in your local area. We just try and help on the back end with a lot of those envoy type benefits, with the marketing at scale, HR, finance, legal, hiring, all the issues that certainly become a challenge. And we're seeing a lot of benefits as we kind of pull the practices together and deploy some of these resources.
Amazing. Thanks so much, Drew. And then next, I'd love to introduce DJ from Prairie Capital.
Hey, everybody. My name is DJ Lipke. I'll give you a quick overview on Prairie. So Prairie Capital, we're a lower middle market private equity firm. We've been around since '97. We just raised our 7th fund. It's a $450 million fund. And our focus is being the first institutional equity investor into a business. So we're basically partnering with family entrepreneur-owned businesses that are looking to grow and scale their companies, and really trying to be a thought partner, a sounding board, and a resource for the companies that we partner with. We've been pretty active. I lead the consumer efforts at Prairie. We've been active in the consumer and healthcare space. So we do not have a current investment in this market, but we've had investments in tangential markets. So on the product side, we invested in a business called Elta MD that was a sunscreen and anti-aging product that was sold into dermatologists, plastic surgeons, and the med spa space. We also own a company called Swiss American Products that's a contract manufacturer that, again, makes those kind of topical products, so anti-aging products that are, again, sold through the med spa space. And then on the multi-site side, we had an investment in a dermatology practice called River Chase Dermatology in Florida. We also have multi-site investments in a dental platform and an allergy platform on the healthcare side. And then on the consumer side, we have an investment in a company called Foss Swim School that are multi-site learn to swim programs, as well as a company called Right at School that does after-school programming for children. So excited to be on the panel and tell you a little bit more about kind of Prairie's focus here.
Great. Thanks so much, DJ. And then last but not least, we have Ted from Skytel.
I appreciate the intro and excited to be part of this panel. My name is Ted Van Gordon, and I'm a senior vice president with Skytel Group and head of our sell side M&A advisory practice here. Our firm offers both management consulting services, helping entrepreneurs and business owners scale and grow their business, as well as my group where we focus on, sell side advisory services, helping entrepreneurs and business owners partner with folks like Drew and DJ here speaking with us today. Excited to continue talking about the industry. We're pretty bullish on the space. We've invested heavily in terms of the firm, and looking forward to answering your questions.
Amazing. Thanks, guys. And look, I think to kick off, it'd be great to get an understanding from you all in terms of what is your high-level strategy? What is your assessment when it comes to making any potential investments in this space or even supporting investments in this space? And Drew, being you kicked off on the intros, I'll look at you first to go ahead and address that.
Yeah, so I think strategically, I talked about the philosophy for us of this building the autograph collection. I think in general, we look at a couple things. One, we do look at trying to identify practices who want to be part of growing something really, really big. We think we're going to build a company that will leave a pretty memorable impact on the aesthetics industry. If you look at any of the analog industries, you end up going from 30 to 50% consolidation rates. We're probably at about 5 right now. So I think there's going to be a huge wave of activity here. And we think we have a nice strategy to do it. We have a leadership team with a lot of experience in the U.S. aesthetics business. We have a nice financial backer, a family office, Leon Capital. And then strategically, I think we're focused on 2 big things. So one, we tend to buy, I'd say, good practices that we think we can help grow. They tend to be not startups, although we are looking at some de novo and startup opportunities. They tend not to be turnarounds, although we could do that as well. But generally, we're identifying practices that are good, healthy practices that need some help as they start to scale. And as part of that scaling, I'd say there's 2 major things that I think are going to be differentiators. So one is a lot of the stuff you've been talking about today, which is how do you actually sell more? How do you deploy some of these marketing resources at scale? It's actually very hard to do it at individual practice locations as much as you guys at RepeatMD and others are trying to make that happen. When you have a bigger organization, you can really figure out deployment, sharing best practices, and doing things well across multiple businesses. We're seeing that already, where I can look across all of our practices. I would say no one's really an A across the board, but everyone is an A at something. So if we can just figure out how we take the things people are A's at and scale them across all of our locations, there's huge benefits. It's really hard to do as a single location practice. I think the second thing that's really critical is you have to invest in the training and education of your clinical staff and also of your kind of staff in the practice. So we've made a big investment there. We just hired a vice president of training and education. We're building out our large learning and development capabilities. Most people are not doing this. She came from Galderma, so she has great experience as well. But I think, you can do all this stuff up front, filling funnels, converting people, signing them up into memberships, Shopifying them, and all these sorts of things we've been talking about. If you don't make sure that you have amazing practitioners giving outstanding experiences and outstanding results, you're just going to lose those patients. So we kind of think of it in a very holistic manner. You got to do all this stuff up front. You got to make sure your providers are trained to provide amazing experiences, amazing outcomes. And then you got to build all the retention and loyalty things on the back end as well. If you do all that really well and you do it at scale, you can make a dramatic impact on practices. And the nice thing is that we can handle all the back end stuff about running the business so that all of our partners can focus on the front end stuff of making the patients really happy.
Unreal. Thanks for elaborating on that, Drew. And as we think about that response, Ted, I'd love to look at you in terms of similar question back to you in terms of how you all think about assessing those opportunities, but also often on your end, sort of representing the other side of the equation.
Absolutely. I mean, Drew mentioned a lot of great, specifics in terms of what makes a practice great. So what would we look at in terms of what is a good, healthy practice, right? And I think at a high level, I'd like to break it down into 3 separate items that we kind of check off when we're initially looking at businesses. And the first one would be, how much operating cash flow, also known as EBITDA, right, is the practice able to generate? And subsequently, it's operating margin. So think revenue minus your operating expenses. When we look at that, good practices have margins above 25%. So that's a good benchmark. The second one being gross profit margin, as in your revenue minus your cost of goods sold, which that tells us how efficiently the practice is able to purchase saleable inventory and able to control waste. So great practices, in our view, have profit margins above 65, 70%. And then the third and final thing that we really look at a very high level is your service mix. So what percentage of your sales are coming from injectables versus body contouring, lasers, other aesthetic services, product sales, et cetera. Many buyers like to see a majority of the mix come from injectables, but others have different theses. And overall, the way I like to think about these 3 things is, they're symptoms of implementing the things that we're discussing today. So if you're great at drawing customer retention, leveraging memberships, you're going to see it in these three categories.
Thanks for sharing that. And it also brings up a great point as we think about not only the customer base, the patient base, but how do you go about the acquisition of those customers? So DJ, I'd love to get your take with regards to customer acquisition in general. As you think about assessments in the space, lifetime value of customer, cost of customer acquisition, what are some of the things that are important for our practices to think about on the customer acquisition side? And what are the specific metrics and strategies that ultimately you all look at or think about when it comes to assessing these types of practices?
So I think, and this is, consistent across, multiple consumer opportunities that we're looking at. We spend a lot of time in kind of businesses that are do e-commerce related businesses too. So, we're looking at LTV, so the lifetime value of a customer, and trying to understand kind of repeat purchase rates and repeat behaviors. So from our understanding, it seems, the repeat, what's great about this business and the kind of injectable side, it's consumables, and you do have a lot of repeat purchases. So we've seen kind of LTV calculations, 2,000 to 5,000 per customer. And we've heard kind of anywhere kind of the CAC or cost of acquisition between kind of 250 to 500. So which leads to kind of a strong kind of LTV to CAC. And that's kind of how people think about it. It could be 6 to 7 to 8 times, which is pretty similar to a lot of our e-commerce businesses. And we look at it a little different on the product side. We'll look at revenue minus the COGS and look at a gross margin LTV. But overall, what is nice about that business this business is you have a strong LTV to CAC. Referrals obviously is probably the best because it's the cheapest. But you're seeing a lot of digital marketing occurring and with regards to kind of how you're acquiring customers here. But those are the metrics that you kind of want to think about is, what does it cost to acquire a customer? What's the average order or the average visit? And then how often are those customers coming in? And that's something that, you'll want to see, or a potential buyer will want to see kind of cohort analysis of customers that you added in different years and kind of how you retain those customers over those years.
Yeah, amazing. And I'm really glad you all brought up the idea of not only generating revenue, but the impact that memberships have. And Drew, as I think about it, I'm curious, as you and your firm, you go through your assessments, how do you value that revenue and that potential revenue split, right? Do you look at memberships as a must-have for you all when you take on a practice in? Is this something that you immediately want to look to deploy? Would love for you to elaborate a little bit further just specifically on that topic and the trends within generating revenue and the splits between one-time versus memberships.
Great question. So for us, we don't look at it as a must-have when we acquire. I will say going forward, we do think it is a capability that we're going to want to make sure that all of our practices have. And part of that reason is, it's kind of what DJ talked about. There's just some value in knowing that you have this ongoing recurring revenue of patients who are intensely satisfied with the services that you provide. So I'll actually break it down a little bit more. I know we're talking about memberships. As I've kind of scanned the marketplace, seen lots of different practices, there's really 3 or 4 components that I kind of think about when we're diving into this in detail. So one is there's memberships, and there's a variety of types of memberships. 2, there are kind of subscription models. So how do you turn something into a ongoing subscription? Then there's like the more full-fledged loyalty programs and capabilities. And then there's also kind of the e-commerce component to it. So I think what I see right now is people are somewhat simplistic a lot of times. You'll run a membership program just within your EMR. You have like 5% of your patients on it. It's not a real value driver. Then I'll see people who have more of these kind of like UniBank style subscriptions or things like that, or a really good membership program, and you could have 25 or 30% of your revenue coming in on an ongoing recurring basis. Well, that's a really, really healthy business. It allows you to invest in different ways to continue to grow that business. How do you get more of those patients on? When you start looking at the lifetime value of those patients, if you look at the customer acquisition cost of those patients, like DJ was talking about, like, it's incredible how much more value you create, and not just the value you create. Those tend to be your happiest, most loyal, most consistent patients. So, we talk a lot about we're hiring practices, we're creating a lot of value. How much is this whole space going to be worth? And that's an important thing. I think at the core, though, you have to go back to to be very successful here, you need to make sure that you're focused on building a really strong business, provides amazing outcomes to your patients. If you do that, all the financial stuff is going to take care of itself, but you have to be pretty thorough in how you look at it. It's not just oh, I've got a membership program. We got tons of practices who have membership programs that are really not doing anything for it. So we got to figure out how you do them well at scale and then hit that kind of full circle of options around membership, subscriptions, loyalty, and e-commerce.
Yeah, I love that, especially the piece of, to your point, Drew, it's not only memberships, but it's the channel enablement, right? Outside of just the location, where can you source that revenue without people just having to come in? And DJ, you had mentioned it earlier as well, in terms of how you all look at investments you all have made in e-commerce. Curious about your take, not only in trends in e-com, but potentially even trends you're even noticing, particularly in this space. Are you seeing a growth? Are you seeing more adoption? What have you noticed just in e-com in general in terms of that user behavior or how you assess it, and just as importantly, anything that's specific to this particular industry?
Yeah, I would say, overall, when the e-commerce segment that we've looked at outside of this space specifically, for a while you had a lot of companies that were not making money and were just kind of pumping marketing dollars, and they were showing revenue and growth. And some of those businesses did get capital or money. But where you sit today, the capital is kind of tightened up. And people, when I was talking about kind of LTV, repeat purchase rates, average order value, and cost of acquisition, investors are really focused on businesses that are making money now. And so that's something that has shifted recently. And so people are taking a closer look at those metrics that I mentioned. The cost of acquisition has gone up quite a bit across the board. But there is, after COVID, e-commerce businesses, have grown, and have you seen an uptick in people willing to purchase online? So what we focused on are businesses that are doing both, right? So an omni-channel and the ability to be able to service your customer through online sales and also the services, coming in the retail stores, which is interesting in this perspective. And so there does need to be a digital component. People are, you need to have a quick website, a searching website on your mobile and through the computer. That's kind of a easy user interface. And then ultimately, I think that you need to have it where, people can schedule appointments, they can buy products. But ultimately, I think, the services are done in that retail store. And so being able to make it where it's seamless between the digital aspect and the brick and mortar, not only in this space, but what we're seeing with some of the other businesses that we've invested in, having both e-commerce and brick and mortar retail presence, and it becoming sort of an omni-channel provider.
Yeah, I love that view of the Omni approach, especially in a post-COVID world where we went from all digital, things reopened, and then this space, or not, just this component of how do you bring that balance? What's the right experience that you want to bring? And that actually,
I was just going to say, experiential shopping. I mean, that's what some people kind of want to come in, they want to touch it, they want to feel it, and we've focused on businesses, within this space that have this kind of consumer ambiance. We did have a dermatology practice that was a little bit more, healthcare related. What we've looked at now is kind of a little bit more consumer feel to them. I'm not saying that's right, but that's just kind of where we spent a little bit of our time.
Yeah, absolutely. And that topic, Ted, had me think of not only from a revenue perspective, what treatments, what services, what memberships are you selling? But what we see often, especially for the folks that are on here, is like the gift cards that they're able to sell, whether that's online or again in a physical location. Would love your take about what considerations need to be made specifically with gift cards for those practices that are selling it, and how that sort of impacts any sort of evaluation, when it comes to potential investments.
Absolutely. I think as we think about gift cards, it's a great way to draw in new customers and acquire new customers. And I know that there's been a ton of great questions in the chat. And I think before I answer gift cards directly, I think someone asked, why do investors really value injectables as a heavy service mix, and kind of tie it into the lifetime value of the customer acquisition cost? It's really because it creates multiple touch points with customers, right? Bringing them into the shop, creating brand loyalty, and really upselling and creating that kind of brand ambassadors within your business. And gift cards are a great way to do that as well. Having higher customer retention comes along with that, and your customers likewise become, brand advocates and start having referral patterns from there, drawing in a customer portal. And so I think that DJ and Drew kind of touched on those things, and gift cards can be a great avenue to bringing that into your practice. But as you think about in terms of selling and valuation expectations, be mindful that gift cards are a liability. Buyers will want to honor the gift cards that you sell after close, because your customer and your client base and your brand image is a key product of what they're buying. And so as you think about it, ensure that you're being mindful of drawing in customers who purchase gift cards, making sure they're coming in and purchasing services, because at the end of the day, at a sale, that's going to be a reduction in the value that gets transferred at closing.
Yeah, it's super insightful just to think about the impact that has just by the enablement of it. And as we think about different funding sources and different ways people can pay and how to drive the adoption, obviously a big component of this space and ways patients can pay is in the world of financing. And Drew, I'd love your take of just financing in general, the role it plays, and also like what should practices be on the lookout for? What considerations should they make, when assessing and evaluating the variety of the different partners that exist today?
Yeah. So also a great question. I kind of tend to think of, you want to build a kind of full stack ecosystem such that it's almost like a seamless journey for someone to identify a treatment that they'd like to get in your practice, assess themselves and make sure that that's right, pay for that treatment, book themselves an appointment, sign up for your kind of loyalty or membership program, and do all that before you even show up in the practice. So if you can do that, you can really change the customer experience, and financing is definitely a component of that. I think there's a lot of different ways to think about financing. There's a lot been going on with classic financing versus kind of some of the afterpays and all this kind of stuff. At the end of the day, what I've seen over and over again is when you can sell someone a $99 a month to get your Botox or Dysport or whatever toxin you want to use, and that's good for the whole year, you tend to have patients who come in more frequently than when you just charge them $400 or $500, every 4 to 6 months when they come in. So for whatever reason, that helps. So if you can put a financing component in place to facilitate that, it goes a long way to helping create happy, successful patients. So for me, the financing is all about where the patient need is. Sure, if you can pay up front, that's wonderful. Not everyone wants to do that. Some people would just rather have the recurring revenue. That's how we pay for all of our phones and so many things nowadays. So it's just a natural explanation of that. I think the challenge I see is the options in aesthetics are very mixed. They're mixed on the capabilities that people offer. They're mixed on the support and service you get. So I think you have to look very carefully to make sure that you have something that is kind of uniquely aesthetically oriented. There are a lot of fees with a lot of these partners. They can get very expensive very fast. So I think you have to look carefully to make sure you're not kind of screwing yourself as you bring on financing options for your patients. So that's kind of the summary. I could go into a lot more detail on that, but that's the summary.
All right. So Drew, what we're saying is always check the fine print with everything, right?
Especially in this case, because like people get worried, they get really nervous about that, right? Credit checks and credit scores, and how much fee is it? And like honestly, people we've went from 7 to 28 practices, so I'm starting to see all sorts of things. I would say one of my big takeaways is most of your financing and advertising agencies are not looking out for your best interest as a practice. That's actually one of the big services I think we actually provide, is like giving really strong oversight to some of that. And most people are not proactive about making sure that their services are actually helping you grow your practice. Mm-hmm. Once they've made the sale, they're pretty happy because there's a lot of inertia. None of us change. So double check the fine print up front and make sure you hold people accountable along the way is probably one of my biggest takeaways that I'm seeing with practices where they're just they're not getting taken care of like they should be by many other partners.
Yeah, and it's a great call out, especially when you I think today, at least in the med spa industry, now around 80% of those practices are single location, right? So this is a lot of newer businesses. These are smaller businesses that want to keep a lookout for that, because to ultimately be able to protect their bottom line. And I think thematic of a lot of practices in this space being single location. A lot of folks in this space, and as well as on this webinar, all have ambitions to say, how do I grow to the next location, right? How do I go from single location to 3 to 5 to 10? Curious for the entire group here as we think through, what advice, what guidance would you give in terms of how do you think about scaling to that next level of growing the next location? What revenue per location considerations you have to make? What should your corporate infrastructure look like? Again, I'll open this up to the group, but knowing the ambitions of the practices that are here on the call today, would love everyone's view as you think about how to expand post a single location or going from however many you have today to the next amount.
Ted, do you want to start there, or I can jump in?
Yeah.
This is my
Yeah, I
bread
was
and
gonna
butter.
say I'm happy to start here. I think maybe one of the things that I'll dive in like a very specific thing is thinking about and being mindful of the sale process and how you communicate your service offerings and that knowledge base amongst your staff. A lot of the most successful businesses that we work with, they have very well trained staff who know about all the service offerings of the practice, who are knowledgeable and able to speak to, or at least direct customers to, the right individuals within the practice to ensure that they are, offering each of their customers a more holistic experience at the kind of local level. And that way, if the staff knows all your services you provide, you're all knowledgeable and understanding of every single value point that you're able to provide your customers. They'll be able to recommend more services. That leads to higher revenue, right? And you'll be able to provide a better experience for your customers, helping to enable them to turn into brand advocates, right? And start referring patients to your customers. I think it's pretty well known, like consumers, they trust recommendations that come from people that they know. And that could be a very easy way for you to kind of bring in new customers.
Great, thanks, Ted.
Yeah, I can add a little bit
Drew,
too.
anything to add to that? Sorry, go ahead, Drew.
Yeah, I think you asked too just about like types of practices and other rules of thumb. I would say for us, there certainly are. Again, it's a lot of effort to go through an acquisition process, so you tend to want to have like a practice of reasonable size. We have everything from smaller single location, maybe $2 to $3 million of revenue, all the way up to big multi 5, 6, or even more location practices. And they're joining just because they really believe in the strategy, the vision, and what we're trying to create with an AMP. Now, that being said, the nice thing about AMP in particular is we can be pretty flexible within our deal structures. And we are getting a lot of interest in, I'd say, the non-traditional kind of options. So we're building some capabilities right now, and we're getting ready to launch a few things with people to look at kind of like aqua novo or de novo kind of opportunities where you're kind of standing things up from scratch or evolving things. There's kind of the traditional, like, here's your EBITDA, here's a multiple of EBITDA model. There are a lot of other models where we can help support the growth and people can earn kind of benefits when they hit certain thresholds. So I'm particularly intrigued by those because I'd rather create my own problems sometimes than kind of inherit other people's way of doing things, but we'll do both. We're pretty flexible on kind of how we approach it. At the end of the day, the things we focus on are good, healthy practices that want to grow, that feel like they're a little bit limited because it's just so hard to do it by yourself. It's so hard to be an expert at everything when you're owning and running a practice. And looking at the capabilities we can bring from a training and education, from a marketing, that really gives you a lot of confidence on how you grow the practice. So when you look at this, and you got to look, everyone's kind of looking at different things, and there's a lot of companies doing this, and most of them honestly are pretty good. But I think you just got to look at like, who do you want to be part of, and what's your goal for selling, and then just kind of match that up with the right company.
Yeah.
Thanks so much, Drew. And DJ, as we have our last minute here, we'd love to just tee that question back up to you or anything else you'd add for the audience in terms of what should they leave here knowing today? What's the most valuable thing that you want them to leave with?
I'd say that it's definitely an industry that's attracting a lot of attention from investors. The demand is there. There's really strong demand tailwinds. And so because of that and the kind of the fragmentation, a lot of private equity firms that are looking to get into the space. So we love businesses when you have, that rising tide lifts all boats, and that definitely checks the box here. And so the things that we would think about, what we're seeing across all of our kind of multi-site is labor, right? Labor issues across the industry here, or not here, but across other portfolio companies. And so building a culture where people kind of want to come and work, and then training and compliance is very key. And then, so that's on the, more internal side that you can handle. And then the customers, you got to satisfy the customers. It's all about customer satisfaction. And so that's, from our perspective, could be a way to build a moat, because you want to think about, you got a lot of capital coming into the space. How do you differentiate yourself, and can you do that through culture, people, and ultimately kind of customer satisfaction?
Unreal, guys. I have to say, like, amazing panel today. I'm looking at the questions coming in, and it sounds like we probably could have done this for another 2 hours. So for you guys, thank you so much for coming on board. Team, if we can just flip the slide so everyone that's joining does have the contact information of the folks on today. For those folks, please feel free to reach out. For the folks on, DJ, Ted, Drew, thank you all so much. This was an outstanding conversation, and I think the audience really learned a ton today. So thank you all again.